Hey everybody, Economic Ninja here. I hope you're doing great. Got some big stories today, one out of Canada and one out of for the central bank and one out of JPMorgan. We're starting to see some very serious pressure, so we're going to dive right into this. Let's share the screen. All right, first one we're going to share. Canada goes nuclear with supersized 1% interest rate hike. And the question is, will the Fed follow? Now, this is very, very interesting because we just had some representatives from the Fed come out the other day and say that they're taking the 1% off the table, which was an interesting comment because they left it very open-ended. They said, to me, I saw that and I go, well, does that mean that you're going to go, 75 basis points on the next one? Or are you going to go 1.25% on the next one? It's really open-ended. But there's a lot of games being played here because the system is collapsing. So let's get into this, and then we're going to share with you the pressure that JP Morgan and I know other American banks are under that you're going to see going full nuclear in the fall. All right, here we go. So the pressure on the Federal Reserve Chair Jerome Powell to strike harder against inflation grew even stronger today as his Canadian counterpart announced a supersized interest rate hike of a full percentage point. The move left Canadians reeling, especially given the implications for their overheated housing market and heavy debt loads. But it also left their sovereign neighbors wondering if the same thing could happen here. I can't wait to give you my commentary on this. With the Fed's next meeting scheduled for July 26th to 27th, analysts are already wagering that Powell will follow the Bank of Canada Governor Tiff Macklem's heavy footsteps. So it says right here, here's why the central banks around the world are entertaining such drastic measures and what it'll mean for consumers. Now, you know what? I'm not even going to get into this. I'll let you guys read it. I want to explain something here that's very important. As the Federal Reserve and other central banks are racing to try and stop inflation, you have two scenarios. You either let inflation around the world turn into hyperinflation, which will collapse world economies, right? Or you raise rates to try and quell it. But if you get too hot and too fast in your rate raising scheme, the problem is that everybody, banks and companies, are not able to service the debt that they're under, especially people aren't even talking about governments right now. I mean, the US government is so in debt that every time the Federal Reserve raises rates right now, it's going to have a very hard time servicing the debt that they're pulling. Okay. So you have literally a lose-lose scenario, or for Ninja Nation, it's a win-win, because if there's going to be a collapse, we better be ready for it and take advantage of it. Right. But, Jerome Powell now is in a position where he doesn't want to look weak against Canada, and there's going to be a lot of people saying, are you really trying to get this inflation under control? Now, if the CPI wouldn't have came in at 9.1%, if it would have still been in the eights, I probably personally would have said, you know what, they're probably going to go, they're not going to go with one full percentage point. But since it came in above 9, that psychological barrier of moving up another digit, I would not be surprised. Now let's dive into this story right here, JP Morgan, which I find very interesting. JP Morgan Chase earnings fell 28% after building reserves for bad loans. Bank suspends buybacks. So it says right here, their earnings fell short of analyst expectations as the bank built reserves for bad loans by 428 million. Now, I want people to understand these kind of terms, bad loans, are coming out into the news. When you start seeing bank earnings falling, those kind of terms, you're going to see that more and more. It's not going to be just JP Morgan. I can assure you of that. Again, this is not financial advice. Don't go out and short the banks. I'm saying not a financial advisor, blah, blah, blah. But I'm telling you, this is going to be the theme over the next 90 days. This is lining up to be so similar to 2008, even in the time of year. It's blowing my mind. It says right here, the company's shares fell in pre-market trading after it would said it would temporarily suspend its share repurchase program. Well, now the reason why it would do that, suspend its repurchase program, is to build up money in its war chest to deal with the other, detonations that are going on inside the company. So it's trying to put out fires right now. And so the last thing they need is to be purchasing shares so that they can put out their fires. Now, Chairman and CEO Jamie Dimon warned geopolitical tension, high inflation, and warning waning consumer confidence could hurt the economy sometime down the road. Now, I want you to understand that Jamie Dimon has been on the forefront of telling you guys what your future is. And the reason why I say hit your future is because the C-suite execs usually don't take the hit that you would think they would when their bank is in trouble and needing a bailout. Actually, it's quite the contrary. They actually end up in a better position, which is sad. I can't stand it. But he's been telling you, get ready for some epic problems in the market because of what is going on. He uses geopolitical tension and things like that. But we all know that it is the sheer size of this debt. And like was it Gerald Celente says, when all else fails, they take you to war. And I believe that's what you're seeing around the world. Countries and central banks around the world are completely insolvent. And so they need to figure out a way of boosting and juicing the economy. If you remember back in, during the Great Depression, what really pulled the nation out of the Great Depression was World War II. It wasn't until the 40s that we really started to see economic stimulus coming in and economic growth because of the way that the Federal Reserve and the government dealt with the finances of the country. So I want people to be looking at this. I'm going to link both of these below, but if you see right here, the banks across the board are down today on this news. It's going to be very, very interesting to see what happens. And right here, this is perfect phrase. The actions reflect Chairman and CEO Jamie Dimon's increasingly cautious stance. The U.S. economy continues to grow, and both the job market and consumer spending and their ability to spend remain healthy, he said in the earnings release. This right here, this everything's okay. Everything's remaining healthy. People need to realize it's not healthy. This is damage control, just like what Jamie Dimon's doing right now, but by not buying their stock back. This is damage control. They're putting out fires. All right, guys, that being said, I hope you got something out of this. I thank you so much for watching. The Economic Ninja is out.